Let's get to Bob Pisani. Dow's down triple digits. Bob, NASDAQ is higher, though. Probably has something to do with the 10-year.
And, Scott, great to see you down here again. Come by and say hello. Missed you very much. Important thing here is, yes, it's a flattish open, but we're at new highs. The breadth last week was pretty darn good here. So take a look at the sectors here. Energy, again, still the market leader. That commodity play Paul Tudor Jones was talking about, still very much in evidence. Banks flattish, techs flattish, more defensive sectors like consumer staples and healthcare modestly on the downside. But overall, I'd say this is either or positive or negative, less than about 0.2% here. The markets this week, the important thing, of course, is the Fed meeting. But remember, we're at new highs. The breadth has been excellent in the last week or so, and that's a very good sign for the market. That's what I watched at AD line. Negatives, of course, is peak everything. We've been talking about that for 6 or 7 weeks, and that still weighs on the market. But maybe if the Fed can come out and talk about perhaps maybe a little further down the road on rate hikes, on the dot plots, there's all sorts of opinions all over the place on the Fed meeting. There really is not a consensus on what they're going to say, if anything. The big debate is why are bond yields so low at this point? What is it signaling? Is it signaling slower growth than anticipated, or even a deceleration in growth of some kind here? Remember, a lot of people very nervous about buying value. That's been a big winner this year when you get a deceleration in growth here. So if you look at the value versus growth trade in 2021, I pointed out last week, it's been great. Value, this is one of those rare times in the last 6 or 7 years where values really had a good start over growth. About 18%, 17% versus growth 9%. If you would have owned the S&P, split the difference, you'd be up 13%. What's value? Value is traditionally associated with cyclical stocks, industrials, material stocks, and energy stocks. And those stocks have done well, but in the last few weeks, the value trade has faltered as there's been some concern about deceleration in growth. So if you look at your classical value names, companies like Nucor, Freeport-McMoRan, Kansas City Southern, here you see some of these names. They have faltered in the last several weeks. They've had a great year. They have all outperformed for the first time in many years over growth stocks, growth traditionally technology and healthcare stocks. So the big debate is what happens. Now, the Fed could influence this whole debate very easily this week, so we want to keep an eye on that. Of course, Paul Tudor Jones was talking about the possibility of going very long into the reflation trade, into the commodity play. Unfortunately, the market's already very much there. This play happened in January, February, and March. This is XLE, the energy sector, up 46%. That's not a typo. When was the last time that ever happened? It's been many, many years since you've seen energy outperform. And materials, here's your two great stock commodity plays that are out there. There are commodity ETFs. There's one of them I'm putting up 26% that owns commodity futures as well. And there is, believe it or not, an inflation ETF that started earlier this year. I had the fellow on who started that, that owns companies that are associated with high inflation, or that would do better with high inflation. What's that? Well, a lot of them are land companies. For example, Texas Pacific Land. They do land leases in Texas on oil and gas. That's up 110% this year. Brigham Minerals are what you would expect. They're a mineral company. Archer Daniels Midland, everybody knows them. Look at this. They're outperforming the markets dramatically here. The S&P is up 13%. Franco-Nevada, a lot of these small gold mining companies also potential plays on inflation. So, Scott, the bottom line is, of course, Paul Tudor Jones has got a great point here, but the market very much is there. The question now is whether there's going to be another leg up in the commodity trade. But for the commodity people, it's been a great year, and a year they haven't seen in a very, very long time. Scott, back to you.
Yeah, good stuff, Bob. Look forward to seeing you in person as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.